A super bubble is typically about 2.5 sigma. All bubbles, in my opinion, we had to define them arbitrarily. So we took the historical data and we said every 2 sigma event, which is in a random world every 44 years, in the stock market world every 35, close enough for government work, we would call that a bubble. And we went through every asset class in the database. It took us months, and in the end, we had a couple of hundred 2 sigma bubbles. There was a handful of interesting paradigm shifts that didn't break, such as the whole Indian economy making a phase change from real peasant economy to a more complicated industrial economy. Exactly the kind of exceptions you might think. Also, oil appeared to go through a paradigm shift back in the first OPEC shock, and never regrouped from that level, whereas the rest of commodities continued down for the 20th century. Oil, you could say, really was flat to slightly up, and that was the great exception, and a very important exception. And again, very plausible. You might think that oil would show the first signs of beginning to run out before other things, and I believe it did. Everything is critical to what is a bubble, a 2 sigma. And they, in the developed world, they all went back to trend, to the previous trend, prior to the bubble starting. And a classic bubble is 2 or 3 years up, 2 or 3 years down. And in the stock market, they've been very well behaved. A super bubble is kind of much more interesting because that has penetrated through the 2 sigma territory of a badly overpriced market and continues up. It also has a second criteria. It has to have really crazy speculation, increase in all sorts of financial activity. People have to start thinking that it will go on forever, that it's a new paradigm, that they only worry about missing out. They buy stocks because they're going up, not because of anything to do with the fundamentals. The classic being the meme stocks, probably one of the greatest examples in modern times of 2020 and 2021. And there aren't many of these. 1929 was a humdinger. 1972-74, the Nifty 50 was an honorary member right on the cusp. You could put it either way. 2000 was another humdinger, bigger and better than 1929, full of absolutely crazy behavior. The housing bubble was very much a housing bubble. Crazy behavior, a 3 sigma event, a bigger, remarkable breakout of housing prices even than 1929 and 2000 in stock prices. And then once again in 2021, we had the 2.5 sigma and utterly crazy behavior. I believe if you look at the scale of it, the biggest, most significant crazy behavior in recorded history of the US stock market. And when you look at those, they go back to trend like all the other normal ones, but they cause a whole lot more pain because they distort the system. On the way up, there is a huge income effect and wealth effect. And when they inevitably break, they're always a shock because everyone has locked into the new paradigm. And they nearly always take longer than people think because they're so powerful. And they didn't get there by accident. They were driven by some underlying important fundamentals. So there was lots to believe in. But they eventually come down to trend, and all but one of them in history go below trend for a while. And that creates an enormous negative income effect and has always caused a recession. If you miscalculate, the recession turns into something really terrible, like the Depression of 1929, like the bitter recession of the Nifty 50, 72, 74, of the near total financial collapse of the housing bust in 08. And one should expect something pretty bad this time, and we await to see if this follows the pattern of history or whether it is indeed that lovely creature, a new paradigm. But history is not kind to the new paradigm thinking. The last couple of papers began to spell out what we thought the fundamental problems were that could get worse. And I conclude that they are worse and more potentially dangerous than the collection of fundamentals surrounding all the other super bubbles, including 1929. We were really ham-fisted in 1929. We persevered in some terrible international trade wars, which was unnecessary and destructive. And maybe we will be very clever this time. Maybe we will be stupid once again. Who knows? But there is a very dangerous set, which you were beginning to describe, but with Russia and China, the Ukraine, and the resource impact of Ukraine, Russia, and so on, and with the breaking down of the world in which international trade increased to one in which international trade may very well slowly decrease, going from increasing efficiency to increasing inefficiency. And with the population profile shifting fairly violently by any population standard, we have never seen a shift of this magnitude, going from rapid growth to rapid decline in a 30-year window. And as recently as the early 1990s, you couldn't find people talking about a population slowing down. We were roaring along. And now the baby cohorts are in freefall. They are dropping rapidly. And people don't realize that the global cohort of babies is below 98 now, 1998, though we peaked in about 05, 06, and we've been declining every year. Even though African baby cohorts are still going up, on a global basis, the total is going down. And in the developed world and China, we are having, in most countries, fewer 20-year-olds entering the workforce. And that is completely unique and could have very bad consequences. And then we have the resource component. I think my colleague and I scooped. We've only had one scoop, and that was 2011. We wrote a paper, Time to Wake Up. The age of plentiful and cheap resources is gone forever, in which we made the case that, of course, in a finite world, you would eventually expect that to happen, and there were now finally signs that it was happening. But the final push over the edge had been the amazing and accelerating growth in China's demand for important resources. For the last 4 years, they accelerated to double digit. They were increasing at over 10% a year in their demand for cement, iron ore, coal, and one or two other things, not oil. I think we shouldn't overlook the benefits of a carbon tax to government income. It would not only be a great source of income, but it would be taxing something you want people to use less of, like tobacco, instead of taxing labor that you want people to use more of. And it would be a much better way of raising money, but you would have to make sure that you reduced income tax on particularly the poorer end of the spectrum to compensate for the tax on energy. But the rich people use 20, 50 times more energy than the poor people around the world, and maybe even within the country 10 or 20 times. As we get more desperate, sooner or later, a political regime will find its way to do something that is effectively a tax on carbon. The good news is, if you take all the people in this game of overshoot, living beyond our means is how I think of it, and you look at how much they obsess about finance and have done forever, for 30, 40 years, and you go back and you take it all out of everything they ever said or ever wrote, it doesn't make any difference at all. It has not changed anything that they, in my opinion, have gotten it wrong. And it probably will continue not to change anything. So as long as they are generally heading in the right direction, everything will work out fine. But I think debt is the most misunderstood thing of all. And the reason is pretty clear. At the individual level, when you're making a list of what you're worth, you add up your assets and you subtract your debt. It is a negative. At the societal level, debt is not like gold. Debt is not like copper or like stock market, a claim on real corporations with real workers and real output. Debt is a zero entry. Debt is double entry bookkeeping. We might as well say, aren't the Japanese incredibly rich that they can lend so much money? But we don't say that. We say, look at the incredible Japanese debt. My God, they will collapse, as we have been saying for 40, 50 years, waiting for them to collapse, unsuccessfully, I might add. Debt is shockingly misunderstood and exaggerated in significance. You cannot move resources through time. Other than a few cans of bully beef in your basement, or at least make sure that the infrastructure is set up in good shape for your children. Other than that, you cannot move assets, you cannot move income. The Germans at least understood this with their Social Security. They know that it is a pay as you go. They don't pretend, as we used to, about lock boxes and Social Security going bust or accumulating. You only have the sum of your goods and services each year to pay your pensions. And if that goes down, you will have less either to pay the pensions or less for everybody else. It is not about debt claiming on the future. Debt does not claim on the future. What debt does is I give you my money today that I could spend and I lend it to you. That is not a claim on the future. It does not transfer income through time, but it scrambles everybody's thinking. And luckily, in this field of overshoot, it doesn't make a damn bit of difference. Our foundation is about 1.4 billion, and we have invested perhaps an unwisely large piece in venture capital, a large chunk of which is green venture capital. And the reason for that is we think that green venture capital, if you only invest in things that seem really important and you concentrate on those that have a hard time raising the money, you'll end up with a risky portfolio, but on paper should give you, in 100 deals, a very high return. And traditionally it has, but every 15 or 20 years it participates in these bubbles. And so we get hammered and we become illiquid, and the companies call for the money that we've committed and they stop funding it back, which we, really count on, and that causes a liquidity squeeze. So times are tricky. I will say this, though, that I think a diversified package of important green venture capital drives the cause better than anything. It's very hard for $1 of grant to keep up with $1 of green venture capital, because the green venture capital on average comes back with 15% profit and then goes out again and out again and out again. So those dollars can be really, in the long run, very, very effective. If you started at the top end, what could be a get out of jail card from our conundrum, or a potential get out of jail card? You would have infinite cheap green energy, right? So that would be a huge help. And wind, solar, and storage might make it, but we'd probably need an order of magnitude improvement in storage costs, a drop to 10 cents on the dollar. And we'll probably get it. It might take 10 or 20 years. And it might take, who knows, longer, shorter. But the other ones are geothermal. I am very optimistic that if we could take our incredible ingenuity and the experience and the trial and error from having drilled 200,000 fracking wells, learning on the job, if we could take some of that skill set and move it to geothermal, there is a virtually infinite supply of energy under our feet. If we could learn through ingenious ways of drilling to handle the temperature, to frack it, to pick up the heat, turn it into either into electricity or even just into heat, and do it here and there all over the planet, that would be huge. And even more of a long shot is naturally occurring hydrogen. Hydrogen is obviously going to be incredibly useful, but getting it is energy intensive, so that really, in the current state of affairs, it's more like a battery than a source of energy. But naturally occurring hydrogen, of course, is a source of energy. And we don't know. In 10 years, it will probably be a done deal. We'll know that it's not a workable, impressive component, but it may be. And so that's pretty thrilling. And then we have fusion. There are maybe now 40 diverse efforts, different efforts, and it's the difference that makes it interesting. I think one or two of them may well make it from an engineering technology point of view in a few decades. And that is, again, an infinite source of energy. We have a few investments. What I worry about for them is that by the time they make it, it may turn out that wind, solar, and storage has made so much steady progress, or that geothermal and naturally occurring hydrogen has, that they will not be necessary, that the capital cost will be too high to compete. But it may be fine, and we have to do it. We need to try everything.